Well, good morning, everyone. This is Scott Thompson, and we are here for our stock investing for beginners. Brett Crowther out there in the chat helping out. Hello to Lawrence and Paul and Eva and Sharon and Will and Ema and Joe and everybody else that's here today. Thanks for being here. You can follow Brett and me on x.com at Scott Thompson CS or Brett Crowther CS. Be aware that there are some imposters out there that may solicit things from you. We do not do that. So if someone's asking you for money or anything like that, be aware that that's not us. It's an imposter. And if you would let us know, that'd be great. You can let us know on our own other x.com, the real one. That'd be great. Hey, our topic today is to, as per a request, many of you over the last several weeks have been asking about, dividend investing and dividend a part of the portfolio. So what we want to do today is we're going to introduce an additional plan, a sample plan. We'll just kind of build everything together today as we go through this, but looking for stocks that pay a dividend. So I'll show you some great resources that Thinkorswim has, and then we'll also take a look at a scan that will kind of refine that list a little bit. And then we want to talk about a new type of entry signal compared to what we've done in the past. This one's going to be a little bit more of more of a value type of investment. And we're going to use a moving average crossover that's well known in the industry called the Golden Cross. So we'll talk about that a little bit today. But anyway, before we get started, let me go ahead and remind everyone that our presentation today is for educational purposes, not a recommendation of any particular investment or strategy or anything like that. Schwab does not recommend the use of technical analysis as the sole means of investment research. We're also going to be using the paper money again today, as we always do. There are some significant differences in the paper money compared to the real money account, one of which is the early assignment thing. We're going to be talking about dividends today, so please be aware there are risks associated with dividend investing. Companies can change or eliminate those dividends anytime, and so be aware of that as we talk about that particular topic today. We also usually cover stop losses, no guarantee the execution of the stop order will be at or near the stop price. And then remember, all investing involves risk, and past performance is no guarantee of future results. So let me jump in here first. And what we'll do is we'll take a look at our paper money account here on Thinkorswim. And what I want to do is just basically kind of start off. If we were going to introduce a new type of investing strategy, then what we would do first is kind of develop an idea, right? So part of this idea is that we're going to use what's known as the Golden Cross to get into a position. So let me go over here to my chart page and just show you what this looks like. I have the SPX chart up here. We're looking at a 5-year, 1-day chart. And it's kind of maybe as part one of our situation here. If you want this chart, this is the script. It's in the description. You can go pull it in the description right now, but I'll chat it into everybody as well. But if you take that, let me just show you how to load these first. If you're new, this is stock investing for beginners, so we often have brand new people, first time they've ever been here. So let me show you this. The way that you load this script in is you come up here to the setup and click open shared items. And then if you copy that case sensitive little, combination of symbols and letters in here, and if you just, I've got it copied, so I'm going to Control V and then paste that in there. You click preview, and I actually gave it a name, so this name should come up when you insert that. If you do have some problems with this, a lot of times you can call the trade desk, and if you give them the code, they can help you load this into the Thinkorswim platform. Hopefully you don't have any problems, but anyway, after you load that in there and click preview, it'll tell you what it is. I like to click this box here just because when you click open shared item, when you click import, it'll load up the chart. So like if I click import, then it'll give me this kind of thumbnail of the chart. And if I click maximize, then I can see the script there. Okay. And I think this one probably has that NDSN symbol in there, but that should work for everybody. And so if it doesn't, again, I apologize. but I'll show you what we're going to be doing. It's really pretty easy. So if you're on the chart here, you can go up to studies and edit studies and then just type in simple moving average. And then you can, add selected, you can put it over here, and the default time frame is 9 days. So you'll have to change both of those. And you click on this little gear and you can edit the length. And then mine's green. You don't have to have green, but mine's green. So I left it green here and click OK. Then if you want to change the other one to a 200-day, change the length to 200-day, and I made mine blue. So again, nothing inherently special about the colors, but that's how you do it. It's a fairly simple chart. You don't really need a script or a chart for this. You can build it on your own. But if you do want that link, then it's there in the description, and I've chatted it in the chat, and so it's available. Okay. Now let's talk about what this is. You may have heard of the Golden Cross. The Golden Cross is simply when the 50-period moving average crosses above the 200-period moving average. The idea behind this is that this is maybe the beginning, okay, maybe the beginning, not always, but maybe the beginning of a new longer-term trend. This 5-year chart that we're looking at on SPX, you can see that we had the green line here cross below the 200-day moving average. That's called the death cross, by the way. And it may indicate that there's going to be an extended bearish trend, okay? So we saw that happen back in August, or when was that? That was, March of 22. We had a little bit of a bearish market there. And then we got the bullish crossover, or this golden cross, right in this period. This is of 2021, or sorry, 2023, February of 23. We got that golden cross, and that lasted until we got another death cross or bearish crossover here in 25 in April. Okay, we had that big drop from February down to April, where we lost quite a bit of market value. The market trended down for a little bit, and then we got the golden cross again over here, and that happened about July. Okay, so that's what this is. If we take a look at the NASDAQ index, you can kind of see something similar. We had the death cross, the 50 going below the 200-day moving average over here. We had what we call the golden cross, or the bullish crossover. The 50 crossed above the 200 back here in 2023. We had that big pullback where we got the death cross, 50 going below the 200-day. And then we had that bullish crossover again here in, what was that? The end of June, first part of July. Okay, so that's what it is. So what we're going to do here now, let's construct this plan together. And as we try to implement different trading ideas, one of the things that I really like people to do is to have an idea, write it out on paper so you can follow those rules or those guidelines specifically, and then do that in paper money, of course. Sometimes we come up with a plan and we don't know how effective that'll be. Number one, past performance doesn't guarantee future results. So, we have to have a starting point. So the idea here is we're going to try to use an entry signal, okay? Entry signal, okay, near the crossover, okay, near golden cross. Okay, now I'm not going to define near. You guys will have to do that. And so Jim's asking on that, when you import that scenario, where's it going to be found? Well, after you import it, probably the best thing to do is go to style and then save that style. When we imported it and you opened up that window, if you save the style, then when you go to load the style, it'll be there. Like, I made mine 5200 MAs. So I did mention or forget that step there. After you import it, good idea to save the style, Jim, and then you can pull that up again. Okay. All right. So very first part then is we're going to use an entry signal near the golden cross. And I mean, ideally that would be within a few weeks. And the other thing is, and you'll have to decide this one as well, is enter when stock price is near 200-day MA. Okay, that one's going to be a little bit harder as we take a look at some examples today, but these are some of the ideas we want to use for our entry signal. Now, I started with the entry signal because I want to now go back to the objective as we take a little bit broader approach. What's our objective with this plan? You know, the other 2 green arrow plan that we've used, we've had an objective of that. And so, you know, the objective on the 2 green arrow plan was basically to buy and hold stocks in the S&P 100 that are trending up and just, you know, buy and hold those until the trend is over. The objective with a dividend investing plan is probably a little bit different for everybody compared to, say, a purely technical based trending plan. You know, the objective here could be, okay, now you have to decide for yourself, but it could be, you know, we want to buy and hold stocks forever that are paying these dividends. And maybe the only thing that kicks us out of a position would be that the stock stops paying the dividend. Okay, that could be one thing. We could identify some, you know, what I would call maybe major old levels of support on a chart. We'll look at some examples as we go through this, but the objective in general is we're going to buy what they're called dividend aristocrats stocks, okay, and hold to receive dividend. Okay, that's going to be kind of the primary objective. Now you could add in some different things here. Now let me show you. This is really, really cool. So the very first thing I want to do is go down here and we're going to open up, you know, our gadget and check this out. So if you wanted to switch the gadget, check this out. Look at this. Switch gadget, go down here to watch list, and I've got a bunch of them here, but let's say we wanted to take a look. If you open up, if you click on that middle section, again, if you're new to Thinkorswim, you'll have the gadgets as watch list right here. It'll probably say default the very first time you open it. But if you click on that drop down menu, it gives you lots of different choices. If you wanted to see all your current account positions, you could click on the very top one here. That's a great one to use. But down here, there's a lot of public watch lists available. Check this one out. Right here in this first public watch list, you have 25-year plus dividend. This is your dividend aristocrats. And this 50-year dividend, this is your dividend kings, I think is the name of that one. And these are companies that have not only paid a dividend every quarter or whatever their schedule is, but they've also increased those dividends. Okay. And so this is a fantastic list. Now, again, there's no guarantee that these are going to continue to pay the dividend, but these are companies that have had a history of paying the dividend. So we're going to use this 25-year dividend watch list. Okay. And so let me go back now to our plan. And this is, I'm going to put in parentheses here, 25 plus year dividend. And it's that public watch list that you have available there right on Thinkorswim. Okay. And the other thing here is we're going to add a little parameter. Okay. Dividend yield minimum. Okay. Is going to be 2%. Now what I want to do is, now we kind of have our technical entry signal. Now what I want to do is show you a scan that you can run. Now, again, I put the scan in there. I did have some trouble with this one when I tried to reload it. This is the code, again, case sensitive here. I will chat it in again here in the chat so you have it. This is the scan. But this scan is so easy. You don't really need to do this, but everyone always asks for these here. So the scan that we're going to use is really simple. Let me show you how to do it, and it'll be recorded so you can come back and review this. But we're going to go up here to scan, and the default setting usually is you'll have 3 different stock parameters. I'm going to shrink this down for a minute, and you'll have 3 parameters that show up. It'll just say scan in all stocks, and this is the default setting. So what we're going to do is we're going to basically get rid of all but the first one. Okay, so I just click the X on those, and then we're going to come over here where it says stock. This, again, really easy scan. You don't really need the code. You can go build this one on your own. There's one criteria, okay, yield, okay, and we're going to type in 2 minimum, okay, enter, and what we're going to do now is up here where it says scan in. We're not going to do all stocks because we don't want to look through 3,000 stocks, although we could. Okay, but we're going to just scan in that watch list I just showed you right here, 25-year plus dividend. We're going to scan in that watch list for stocks that have had a history over 25 years plus of paying a dividend. And there's a few in there that are less than 2%, and there's some that are above 2%. So we're just going to use this 2% as our minimum. And you should see there's 38 matches. So when I click scan, it's going to kick out, or in this case, looks like 37 now, 37 stocks that pay that 2% dividend. Okay. And so now after you run this scan, what you want to do is save this watch list. So you click on this little 3-bar drop-down menu, save as a watch list, and you can name it whatever you want. I just named mine, 25-year or plus 25-year div, 2% minimum, I think is what I said. And then I saved that. Okay, and then when you save that, let me show you where you find it. Okay, this is specifically for Jim, but everybody else, you guys can follow along. Okay, so once you've saved that list, let me open this back up on your gadget window over here, and mine's a little bit expanded because I've got the larger font, which makes it a little bit easier for you guys to see my text. And although not easy, if your eyes are like mine, it's still hard to see sometimes, but that's about as large as I can get away with going here. But once you save that, you have your watch list gadget, right? And so you click on that, and now you want to go to personal, and you could come in here, and this is the list that I have, 25-year dividend, 2% yield minimum. Okay, and then you click that, and now these are the stocks that came up in that search. Okay, so let me just kind of recheck here. I covered a whole bunch of stuff in a little time period, so I just want to make sure we're kind of on the same page here. All right, so let me kind of take a little breather. I'm going to pull up my our plan. So our objective, we've got that identified. We're going to buy those Dividend Aristocrat stocks. I showed you how to do the scan, and I showed you how to save the scan into a watch list, and I showed you where to find that watch list. Okay, and then now we're going to go look at a few examples and trade this. But before we do that, we need to have you have to have an idea of, well, how are we going to allocate our funds? Okay, so let's take a look here. This is just again an example. You don't have to do this, but if you started off with, say, a small portfolio or a smaller portfolio, and again, you can define what small is, but we've been investing as new investors, right? Stock investing for beginners in our plan number 3. And, if you want the details on that plan, you can go see episode 3. And I went through all the rules for that one. We're going through the rules for this sample plan number 4 together as we speak here, just kind of identifying some ideas. But for allocation here, I thought what we would do is just, try to keep it really simple and buy $1,000 worth of any particular company. Okay. So we're going to do that. $1,000 invested in each stock. Okay. Now, again, you could change that up a little bit. The idea here is this allows us to have a variety of different positions and a little bit more diversification, so that if one gets smashed because of a bad earnings or something like that, we've got our funds allocated over multiple stocks. Now, again, nothing inherently special about this. If you had a $10,000 account, this would probably be too large of a allocation. That's 10% per stock. That's about the very maximum that a lot of investors will use when they have a $10,000 portfolio. If it was a $50,000 portfolio, and we invested $1,000 per, well, then we could have up to 50 different stocks. And then we run into a problem with, well, I can't manage 50 stocks. So you'll have to find that balance for you. But I wanted to have it be small enough that we could take a lot of different positions here and go through this together over time. But I also wanted to give you some ideas of how that would work. Okay. Now we've got our plan. We've got kind of the entry idea here. And what I wanted to do is take a look now at a couple of examples. So let's go over here to the charts tab again. I pulled up our list. Okay, this watch list that we created. Let me move this up a little bit. And what I did this morning is I just looked through each one of these as a potential trade, or I didn't cover all of them. I just ran out of time, but I did find a few that I want to go over with you to take a look at. Now, I don't want to be on this 5-year daily chart for my stock review. So what I did do is I went and I changed my time to a 6-month chart, same chart, but it's 6 months. So now when I'm zoomed in, I can see where the moving average is and where the price action is relative to the moving average is a little bit easier. Okay. And the very first example that I wanted to look at was McDonald's. Okay. So McDonald's here, kind of interesting, is McDonald's has been falling pretty hard today. It's down 1%. And you can see that we've not only closed below the 50-day moving average, but we've closed back below the 200-day. And so there's some interesting things I want to talk about here as we look at McDonald's. Now, the very first thing I want to do is show you where you can see the dividend yield. Okay, this is built into Thinkorswim, but if you go to the trade page and type in MCD, the default here is you're going to have like the last net change bid and ask. But do you see this little caret right here? If you click that, it'll open up another section, and it shows you the dividend yield right there. So just so I can see that everybody sees this, what's the dividend yield on McDonald's? My arrow's pointing at it. It's open book. You can go ahead and cheat, but someone chat in that dividend yield, okay? All right, so gave you a few seconds. It's 2.35%. So that meets now our criteria, right, that we had for our plan, which is to invest, invest in stocks with a minimum of 2%. Does everybody see that? Okay, so let's take a look over here, and now let's discuss together. Now, this is going to be a little bit, I think, could be very contentious here as we take a look at our trade on McDonald's. Okay, so let's go back a few days before we had the golden cross. Okay, does everybody see that? Okay, as you're reviewing your entry rules or your plan, one of the things that's very useful to do is to go back before you have what you think's a buy signal. Our candidate meets our objective, right? It's a dividend aristocrat. It's got a 2% minimum yield. And so now we're just trying to decide, does it meet our entry rules? Okay. And so Paul asked a great question. Are we waiting for this to close back above the 200-day? Well, let's talk about that. So we're back in time here, and I've got my cursor. The right side of my chart is here on the 28th of August, right? And so the question then is do we have a buy signal based on now what we're combining our dividend yield rules and our technical rules? So you guys help me out here. On the 28th of August, okay, just a couple of weeks ago, is this a buy signal? Okay, not yet, right? It's not a buy signal, okay? But if we move the chart forward, okay, we're just going forward today. How about here? Let me zoom in really close so we can just see, what we're looking for is just the moving average crossing over, okay? So let me get rid of my little line that's a little bit annoying there, but and then let me do this so it makes it a little easier. Okay, so right here, do we see that crossover yet? So this is part of like what I consider a daily routine. When you're going through your watch list, I love the searches, I love the scans, I love the scripts that can say, here's one that gave a buy signal today. But please, when you're first starting out, go through the watch list. I mean, there's 37 or 38 stocks on there. Just look at every single one and just ask yourself, did it cross over? If it did, then we've got an opportunity to do some further analysis to determine whether we want to buy it or not. But, for heaven's sake, I don't need a script or a scan that says, that crossed over. For me, looking at the chart daily is a little bit like dating somebody. I want to get to know them a little bit. I don't necessarily want to marry him the first day I see him, right? You know, if my roommate said, "Hey, Scott, there's a great looking girl over here in my history class. You got to go, go marry her." It's like, "Oh, hold on a second. I got to date her a little bit here. I got to get to know her." So this is what I like to do is look through that watch list every single day and get to know the stock a little bit. Is this a volatile stock? Does it tend to trend up and down? Does it bounce around sideways in a range? And it's really hard to get that information on just running a script or a scan today and finding, oh, there's a crossover today. I'm going to go buy this. Okay. So that's my 2 cents. I'm off my soapbox here for a second. But anyway, so day next, right? Move forward, no crossover. Guess what? We're done with our analysis. Don't worry about that. We don't have to do anything else. Okay. Next day. Oh, not quite there. Now, here's another thing that I want to show you. If you're not sure, okay, because like when it crosses over, it's sometimes hard to tell, but if you put your cursor on that particular day and just look at the top of the screen there, that day you can see the green moving average is at 301.69 and the blue moving average is 302.12. Does everybody see that? So like when I have my cursor on the 2nd of September, I can look at the numbers at the top, and with my abacus and some clear, quick deduction, I can determine whether the green line is below or above the blue line, okay? So this particular day, not a crossover, okay? Next day. Okay, at the end of the day now, what do you guys see? Okay, this is on the 3rd of September. 3rd of September, right here, we now have a crossover. Now, let's go back over here and visit, because I think it's important when you talk about a plan that we cover some of the nuances associated with the rule, okay? So do we have a stock that meets our objective and our watch list criteria? Yes, we do, okay? Entry signal, okay, near the golden cross. That's number one. Enter when the stock is near the 200-day. Now, this is what's up for debate right here, all right? And to Paul, your question here, right? So let's look at this. All right. Now, some people would say, you know what? That's the crossover day. I don't know what's going to happen to McDonald's. I mean, it's already been trending up nicely, making higher highs and higher lows in this short term, maybe getting into intermediate term here. I don't know if this is going to be at 400 before it comes down and touches the 200-day moving average. I'm going to buy today. Okay, somebody could do that. All right. So let's walk through a little example here of doing that. If we did that, let's just say the close is at 316 to keep the numbers simple, and we're going to allocate $1,000, and we say $1,000, okay, divided by 316 cost of the stock, and we could buy 3 shares. Okay. Now, again, this is a very, very small account. We're talking about allocating $1,000 on a $300 stock. We're not going to be buying dozens or even 50 shares of this thing, okay? But the point is we could, okay, if your interpretation of near the golden cross, which I think everyone would agree with that, the day it happened, that's pretty near, is the stock near the 200-day moving average? Well, the 200-day moving average is down there at 30, what was it? About 301, 302 at that day. We're $14 off on a $3 or $300 stock. So what is that? About 5% off? So some people would add a percentage. I want to see, okay, within, 2 to 5% of the 200-day MA. Could we do that? Sure. So this is just an example. It's not one that I necessarily want to follow, but I'm just giving you some ideas as you start to explore now on your own some ideas of how to implement some of these rules. Okay. So that particular day, for me personally, that's not very near. Visually, I want to see it closer than that. Now, here's what's interesting though. On McDonald's came down a few days, right? I don't think anybody would like to buy it up at 316 and then have it be at 306, 10 days later, right? But this is starting to get interesting. Okay, this is starting to get interesting here. Here's the 200-day moving average. Let me go ahead and shrink this back down so we have some more space. But you guys help me out. Where is the moving average value? The 200-period moving average. Does everybody see that? I'm going to leave my cursor on there, hands off for just a second. But where is that moving average value right there that day? Does everybody see it's at 302.76? The closing price now is at 302. 308, or sorry, 307. That's weird. That candle looks like it closed at 30. Oh, there it is, 308.43. Okay. So now we're only $6 off the moving average. And so we could buy that there. You know, that one's much closer, right? It's much closer to the 200-day moving average. And then let's go to today now. We close below the 50-period moving average. And let's zoom out just a little bit so we can get a little bit better picture here. This is where we're trading right now, is we closed below that 200-day. Okay. Now, as of right now, our entry signal is based only on the golden cross, which we still have, right? That's still valid. And when the stock is near the 200-day. Now, could someone say near and above the 200-day, right? You know, that's what Paul was asking earlier. Paul was asking, should we wait for this to get back above that moving average? So, you know, I'm going to leave the answer up to you there. For our plan, okay? For our plan, we're just going to go with at or near, okay? Now, the reason that I'm going to do this is for this next little thing I'm going to show you is this idea of support. You know, if we look at the chart, we had some dip below the moving average and then traded back above and had a nice little rally. It closed below both moving averages. This is all before that crossover, by the way. You know, it closed below the moving averages, and it looks like we have established some support, old resistance in this neighborhood. And I'm just going to draw a line there. Is in this neighborhood, right? We'll use that low. So there's a potential support level. You know, if we clicked right here, we had some support. And then, of course, I'll just draw one. There's other little levels of short-term support and resistance through here, but this is our extreme low at 283. All right. So you'll have to decide now whether or not you want to wait for the stock to get back above the moving average, or if you want to, you know, just kind of look at that near the moving average. Okay. And then Mr. Jason saying, why not just dollar cost average all your picks? Well, that's kind of the idea here, Jason, is, you know, we have some plans where we are dollar cost averaging, and we'll probably not have time to review those today, the things that we've done in the past. But, you know, as you add to your position, again, we're doing such a small allocation that $1,000 on these for our stock investing for beginners. Now, if you've got a much larger account, you could certainly do that. You could buy a partial position here, and then as it goes back above, maybe add to that position. But for our example, we're just going to go, you know, look at this as a long-term, you know, buy and hold to receive the dividend. And really, one of the main things that I think is important to at least consider is taking a look at some longer term support areas. Now, you know, 283, 294, 298, in the grand scheme of things, these are probably all pretty close together, especially when we're talking 3 shares. You know, and ultimately, this is what I find interesting for everybody, is you just want to be very comfortable with what risk you're putting on. So let's do this. The next, because I want to place a few trades here together with you, let's go to the monitor tab. And the very first thing I want to do is I want to create a new group. You know, we've got some different plans that we've been trading over the last 13, 14 weeks or so. And we're going to create a new plan for group. Okay. So up here, I'm going to go click on my little menu. I'm going to do add group. And we're just going to call this, you know, dividend investing plan. And I may add to this in future classes, but just for time, I'm going to call it dividend investing plan. And that's our new group name. Okay. And it put it up here. I'm going to move this down. Okay. So I'm going to move it down, and it just automatically moves down. Click, move down. And so now this one's at the bottom. Okay. This is at the bottom of our plan here. And so the stocks that we trade using this particular plan, we're going to throw into this group. Okay. So here we are looking at McDonald's. We have the crossover, we're near the 200-day moving average. We got some ideas of where support and resistance are. We're going to go ahead and buy this. And I like to draw a little green oval on the days that I buy something. So we're going to go in here and draw a green oval. We're going to buy how many shares? Well, 1,000 divided by 300, that's 3 shares. Pretty easy. So we'll go to the trade page, click on the ask price. We're going to change this to 3 shares. Let's move that so we can read it a little bit better. 3 shares, and we're just going to buy it at the current price. So I'm going to make it a market order just so it fills while we're talking. And we're going to click confirm and send, and then we're just going to review the order, okay? So we're going to buy 3 shares. We'll just double check our investment, okay? It's going to be about $906. We're going to move this down into our group, the dividend investing plan. Anytime there's a red line here, you know, just kind of be aware of that. Market orders might change to limit orders. You'll see those with stop orders as well. But we're not going to have a physical stop on these. This is going to be kind of more of that buy and hold. We're not really, you know, worried about the fluctuations. We just want to really have to see that longer term trend, the crossover continue. Okay, I'm going to send that order off. Should fill here pretty quick for us. Why that's not filling, but we'll let that marinate for a second. There it goes. Okay, with Scott filled, we're in there on that trade, and I want to take a look at one more example on another stock, and we want to just talk about that, and then I'll come back and address some questions, and depending on time, we'll see what we can do for follow-up here. Okay, so next one that I wanted to do from our watch list that we just created is there's another one called T-Row, T-R-O-W, and this one you can see, you know, was trending down for quite a while. We got the golden cross over here. That actually happened on the 2nd of September. Looks like we had gap up on probably some good news. It's come back, and now we're below the 50-day moving average, but we're trading above the 200-day. Okay. Now, so kind of same process. Let's zoom in a little bit. Let's identify some levels of support. You know, we had, let's draw some lines here. You know, we have some short-term support right there. It's kind of sitting right on that. We have some old support and resistance in this neighborhood. Let's draw a line about there. And then we had some over in this area. Okay, so I'm just trying to identify those. We have the golden cross. We're near the 200-day moving average. We want to do one last check on the trade page is see the yield. So if we type in TROW, this one pays 4.87% yield. And so does it meet the parameters of our plan here? I would say it does for our example, not a recommendation. And we're going to go ahead and draw a little green oval today. And how many shares of this can we buy? Well, this one, you know, if you invest $1,000, we go with 9 shares to be right under 1,000. I think if you wanted to go 1,042, that would probably work for most people as well. But we'll go ahead with 9 shares on this one. And how do we place that order? We click on the ask price, change our quantity to 9. And again, I'm just going to make it a market order so it fills while we're talking here. Confirm and send. We want to make sure it's in our group. Dividend investing plan. This is a market order. Says, you know, it could change in fast markets to a limit. We're going to send that order off. And that order should fill here pretty quickly for us. Okay, just filled. And now we have that position in a new, more of a dividend investing type of approach. And we'll expand on this over the weeks as the weeks go on and go for, you know, more trades. Okay. So that's what I wanted to show today. Our objective was to kind of introduce this new plan. Okay. We're using a 50 period and 200 period moving average. We scanned in the 25-year plus dividend list, looking for stocks that had at least 2% on their yield. You know, if you wanted to add some different parameters to that, you certainly could. All right. We added a group. I showed you how to do that. Let me show you how to add, you know, it'd be kind of cool in our columns here to have a yield column, don't you think? So let's go over here and click on the column header and let's look for dividend yield. Okay. We're going to add that to our list and click OK. And right there, it gives us the percentage, our dividend yield. Let me show you how to do that again real quick. So, oops, not that one. Click on the gear and then just type in div, and then it shows yield, and you click that, click add, and it'll put it on your current list of columns. All right, so now we have our dividend yield there. And this really should be above 2. Now, let me give you 2 little exit criteria as we wrap up, okay? Exit. On the 50 crossing below the 200-day, okay? Or a break of major support. Now, I know those are some vague terms there on major support and near, but the challenge is that some stocks will get that crossover, and then a few days, few weeks later, it'll cross again, and it'll just oscillate back and forth. So, you know, as a crossover strategy, I think it's useful to have this little addition, you know, not to go strictly on the 50 crossing back below the 200, because sometimes you'll see that happen within a few days or weeks, and it doesn't really break a support level. So that's why I went through that exercise of identifying some kind of major support levels. So if we get that oscillation, that we'll stick with those and collect the dividend. Okay, so that's that. I do see a question about Apple in there 20 years ago. I can go research that. I'll put the answer in the comments. But again, hopefully this was helpful for you. We are continuing to do our 2 green arrow plan. Last week I introduced, you know, scaling out at 5%, and I actually chose 3 stocks, GM, I think EMR, and Walmart, that were kind of below the 5% gain, and I put a 5% exit on half the shares, and those actually triggered a couple days later. Okay, so we'll probably talk more about that next week. In 2 weeks, we'll do a review of our ETF tracking plan, which was plan number 1. And just to kind of give you an update, we've been investing about $7.24 each day. We almost have a full share of the NASDAQ ETF, and we almost have a full share of the S&P 500 ETF that we're using, okay? And then lastly, we are continuing to do every single first trading day of the week, we invest $50 in these top 10 holdings. And none of these are recommendations. These are just some of the plans that we've presented over the last several weeks. And just want to show you, I think it was Mr. Jason asked about dollar cost averaging. So that's what we're doing in this situation. Let me show you, like right here, you know, we've been investing partial shares every week. And I did the last one this morning, and you can kind of see there's 210, 204, 239. So we have been essentially buying partial shares, just like you would using stocks, a feature on Schwab called Schwab Stock Slices, which isn't a recommendation of that strategy or to use that plan, but that we're simulating that here in Thinkorswim. It shows my average cost at $215, and the stock is trading at $237. So we actually have a little bit of a gain on those. We're actually still losing money on Costco. This is kind of interesting. Our first purchase on Costco was at $1,008, and my last purchase was $962. So we are doing a lot of that dollar cost averaging in this particular plan, and that one was, you know, sample plan number 2, and we covered that in episode 2 of our webcast. So you can go there on our Trader Talks channel and find the playlist there. You know, the homepage, go to playlist, and ours is just right here at the top. You can click on view full playlist, and you can see all the different episodes and classes that we've done. And so episode 2 is when we introduced that plan to do that fractional shares. Okay, so hopefully that's helpful for you, everybody. Have a great day. As a reminder, again, the presentation was for educational purposes, not a recommendation of any particular strategy. Dividends are not guaranteed. Be aware of that. And have a great day, everybody. We'll see you.